Welcome to Finscale, a podcast created by Solen Niederkorn, shedding light on innovation in finance, banking, and insurance.
AML Risks, Crypto, and Algorithm, Mircea Miheascu, CEO of Coinfirm.
And now we put all of this together, like 380 risk flags, we call them, which are calculations. And we have an aggregation methodology. In the end, we say our customer, this is the easiest use case. Our customer will give us an address, and within like 1.8 seconds, we come back and say, the risk score is 17, low, no problem, do business, or risk score is 93, high risk, stop, investigate.
Two complex concepts together in this episode, crypto and AML risk scoring. Keep cool, that remains completely understandable. Mircea joined Coinfirm 18 months ago to accelerate the expansion of the software provider offering AML and risk analytics solution for blockchains and cryptocurrencies. Supporting over 1,200 cryptocurrencies, including Bitcoin, Ethereum, Dash, and Hyperledger, Coinfirm's AML solutions are used by over 140 global clients ranging from crypto exchanges such as Binance, protocols like NEAR to major financial institutions. We cover the entire range of risks that Coinfirm helps its client to mitigate, such as regulatory risk, transaction, and counterparty risks. We deep dive into the 4 different building blocks of Coinfirm: on-ramp, on-chain, off-ramp, analytics, and see how the startup improved the knowledge of the compliance officer to get into that crypto space, shifting from a pure TradFi thinking to a hybrid one to understand and properly address those risks. We also talk about the last Series A with investors like Milligame Venture and CoinShares. Enjoy listening. Hello, everyone. Hello, Mircea.
Hello, Solen.
I'm very happy to have you on my podcast. You know that this is the first edition in English, so I'm very proud that it's Coinfirm that starts this series of episodes. Thank you very much for your time.
I'm glad we are able to help, even though I'm not a native speaker.
It's okay.
Hopefully, I will be able to explain in English what we do so your audience can learn about what we are building at Coinfirm.
Where does your first name come from?
It's a Romanian name. I moved to Canada 30 years ago. So
okay.
After 30 years, I can discuss professional topics only in English.
Okay. Mircea, before we start with Coinfirm, can you maybe present yourself and explain to us, give us a short feedback on your experience in banking, VC, and at IBM, if I remember correctly?
Yeah. I've been doing many jobs. I've been in software development for over 40 years, and software development specifically for financial technology, for banking. Mm-hmm. I have worked in large software development companies. I manage technology development teams at large banks in both North America and Europe. I have started a company that was part of the early stage of cloud computing technologies. We've been acquired by IBM. Mm-hmm. Ended up spending almost 10 years at IBM managing various development projects, products to be used in data centers, especially for large financial institutions. Mm-hmm. For a while, I managed a corporate VC. For a while, I managed startups in operational role. And I came to Coinfirm about 1.5 years ago at the request of investors. They asked me to help the company grow. I have helped the founders and the team at large. We are now 70, almost 80 people, build a successful software development company in the field of crypto compliance and crypto data risk analysis.
So you said many complex words. So we will deep dive. You said risk, compliance, AML, and crypto. So prior to jumping into Coinfirm, I would be interested to go through the main typology of risks that financial institution, custodian, or even payment providers are facing when they're entering that space, that crypto space. Could you do us a sort of go through those risks?
Yeah, so some of the risks that you will encounter as a new player in the crypto space are similar to the risk in fiat space. Mm-hmm. And some of them are quite different. And I'm not going to talk about market risk. Yeah? So market risk is the calculations are totally different. Volatility is totally different. And we are not in that space because our target customers are not the traders. Our target customers are the compliance officers, the ones that need to manage, let's say, not only regulatory risk, because sometimes regulators will tell you how to do it and what to do. Mm-hmm. And the jurisdictions where this is more advanced, like in the United States, the regulators are quite prescribing what to do. They even say, and this is from a couple of months ago, that market participants in financial activity using crypto rails should be using blockchain analytics products like the ones that Coinfirm provides and our friends and competitors. Mm-hmm. In other areas, they don't mention that. At the same time, this is important, let's say, managing regulatory risk. And the regulatory risk goes the full gamut from you'll use your license if you don't comply with regulations, all the way, because in the end we are talking about a lot of money in fiat terms. I would say even going to jail if you do business with certain nefarious parties. But the underlying of this regulatory risk is to manage counterparty risk.
Yes.
The counterparty is controlling an address, let's call it a wallet, even though a wallet can be more than one address. Mm-hmm. And when I say controlling, it may be through an intermediary, it can be through a subsidiary, it can be controlling an address that you don't know it's associated with a counterparty, but software like ours will determine how many related addresses are managed by one counterparty. So the key one is the regulatory risk.
Yes.
However, very closely related to this is the counterparty risk. Mm-hmm. Now, there is the discussion about the transaction risk. Is there a transaction risk? And some of our competition, they focus on the transaction risk. Mm-hmm. We see this as a legacy of the methodology coming from the fiat world. The fiat world has to start with the transaction because that's all it knows. When a bank has someone making a large deposit in cash, that's a suspicious activity. It needs to be reported. And that's about what the bank sees. Doesn't see how did the individual get that cash. Mm-hmm. And when it receives money from one, let's say, wire transfer, it knows who sent the wire. Doesn't see who sent the wire to the wire, send the wire, how many steps have happened before. Yes. There is the total local visibility. Mm-hmm. In the crypto world, because all blockchains are public, yes, this information is available. So new ways of measuring and quantifying counterparty risk can be used, and we use that. So the transaction by itself doesn't have a risk. The risk is derived, is inferred from the risk that is associated, calculated to the two ends of the transactions. Mm-mm. And it's actually simple. Once you know the risk profile of the sending party and the calculated risk and risk profile of the receiving party, and you go back in all the transactions preceding and all the transactions following, yes, now you have a comprehensive view and you can determine what's the risk of the transaction. There is the counterparty risk, is the regulatory risk. Now, when we are talking about AML, when we are talking about FTF, so anti-money laundering, counter-terrorist financing, it's easier to think about all of them as illicit activities in the real world supported by the crypto rails. Yes. You can do money laundering in many traditional ways that are using traditional here almost as a joke, because this has been going on for a while. It's not new in crypto. The same goes for terrorist financing. The same goes for using cash or fiat, for illegal drug trade, for arms trade, for many things. Yeah? So the only one, let's say, new illicit activity that has been supported, it's easier to do in the crypto world, is ransomware. Mm-hmm. Also, ransomware is where a lot of our efforts are being focused. Yes. There is also, outside this general behavior pattern that we detect and risks that we calculate, that where we can see does this look like money laundering? Does this look like terrorist financing? There are very simple situations where specific addresses and entities that are associated with them are on a list of sanctioned entities. Mm-hmm. It's easier to do this when the regulators in various jurisdictions, and once again, the US ones are very much at the front of this effort, will tell you, don't do business with this 1,000 addresses. That's the easiest. Mm-mm. We go way beyond that and say, don't do business or evaluate your risk of doing business with another 80,000 addresses on various blockchains controlled by 600 entities that are at the border between legal and illegal activity. And this is where more effort needs to be put into place by the compliance officers. It's not always black and white, I'm saying. So you have like a general idea about the kind of things that are possible and how it's different from the risk that you see in the traditional financial institute to crypto.
Exactly. What is interesting, because you said that you were mainly in contact with compliance officers. So do you have contacts with compliance officers that come from the financial area and now recently entered the crypto space? And if yes, do you believe that there is still a room for improvement in terms of understanding how it's working? Because my impression is that there are a lot of people coming from finance and I would say TradFi and working in the crypto space, but having the reflex from the traditional finance kind of risks and replicating in that crypto space.
You are describing our daily efforts. And this is exactly what we see. And we are talking with a lot of them. And what we have seen and we have recognized, and at least one of our competitors is doing the same as we do, which is we provide an education. We provide training online, of course, and teaching them, not by them, I mean various employees of traditional financial institutions that have been tasked or have been transferred to building a crypto division or a division that deals with crypto. And we are helping them in two ways. The ones that have already bought from us, that are our customers, we send people to their location and conduct in-person training and we explain the concepts, not what Bitcoin is or this level. Yeah. There are, I don't know, at last count, 3 million YouTube videos explaining how to make money from crypto and what Bitcoin is and so on. But what does it mean from managing risk point of view? How do you need to change your thinking? And we don't necessarily offer a certification on our product. Yeah. We're not necessarily interested in teaching them, click here, click there. Of course, this is how you actually perform the function, but we go to the concepts. What's the concept of managing risk in crypto? And what's the difference between maybe compliance risk and sanctions, even though sanctions are a subset of compliance. Sometimes they're different departments.
We've seen a lot of fintech deployed those last, I would say, 5 to 10 years. I'm thinking of, for instance, of Comply Advantage, really focusing on AML compliance, but I would say in a traditional finance area. So do those players are entering that space, or you have just the emergence of new players like Coinfirm? And because do you believe that it's completely different, or do you believe that fintech players, in the market already, can enter that space?
We've seen various business models. So one of them is we've seen the players, the existing solution providers in compliance for fiat, building a solution for crypto. We've seen some of them partnering with Coinfirm and our competitors. And we've seen some of them not doing anything because, crypto is going to go away and who cares? What's crypto? Yeah, I think that each CEO of large bank has said at one point that there is no need to worry about crypto, it's going to go away. So we see all three behavior. And the one that we like the most is the partnering. And we started about a year ago talking about potential partnerships with various players outside what we do For example, KYC, we don't do KYC. We partner with KYC providers. And with fiat, because the two are, at least for the foreseeable future, linked. There is what's called on-ramping, which is selling fiat to buy crypto. There is off-ramping, which is selling crypto to buy fiat, and everything in between on-chain activities, including cross-blockchain and all that. So it starts and ends with fiat. So detecting the connection between the two and connecting risk at the edges of the crypto world is where traditional solution providers will provide value. We think that it's much easier and faster and better in the end if they partner not necessarily with us, but with a similar solution. Because, as I mentioned this a couple of minutes ago, it's a huge data set. It's a complicated technology. We have our experts that have been doing this for 5, 6, 8 years, so almost since the beginning.
Yes. Yeah. You don't improvise. You don't improvise.
Yeah, it's not. So, in a sense, I don't know. I've been through those days more than 20 years ago where you required a PhD degree to be able to build a website. Not anymore. But we are not in that
Thank
stage.
God.
In the stage, we're in the stage where you know what's going on. Tools are being built, and we see a lot of tools being built that some of them are even free, and they provide one of the angles, one of the views into the crypto world. The comprehensive, the way we do it, has value, and it will accelerate the adoption of tools that are fiat only. So today we support 45 blockchains. Today we support over 900,000 cryptos.
Wow.
Today we have 1 petabyte of data. Just transferring from existing nodes onto our data set for risk analytics, just that requires months of data transfer. So it's not easy to start from scratch.
Yeah, I can imagine.
That's why the ones that have been doing this, and we are not the first. Yeah, so some of our large competitors, they started 2 years before us. So I assume they have even more data and even more know-how of their products.
Okay, thank you very much. What would be interesting now is that you present Coinfirm, because it's a firm that has been founded in 2016, if I remember correctly. And It's been growing. You've joined 18 months ago. So how does it look like today in terms of figures, team, geographic presence?
So we are about 2/3 of our team is in Poland. Most in Warsaw, but also in other locations. We have a hybrid workplace policy, so we don't necessarily ask people to show up in the office. So once in a while, for some teams, once a week. For the ones that live further away, once a month, they come to the office. So we reconnect in person. We also have a team, sales and marketing and partnerships in London. We have a small team, myself and a couple of my colleagues in sales, in enterprise sales in the US. And of course, depending on location, we have one in Spain, one in Japan, one in Paris, France.
Very international. Team. Very international.
Yes, we are an international team. We do all the business in English. Of course, when 2 Polish colleagues, they talk in Polish, but that's not an issue. Everybody is fluent in English, and this is the language that we use. We do have native German speakers. We do have native Spanish and French, and this helps a lot. Japanese, we also support our customers with Japanese customer support. Yeah. So we do have this view that the crypto world, while using English as the primary language, this is how we talk with each other. We are not, in a sense, even a European company. We are an international company. Our customers are in 40 countries today. And we are now approaching 200 of them. And
can you drop a few names so we have an idea? Who are your clients?
Some of the names are, for example, the largest exchange in India.
Okay.
CoinDCX is our customer. Exchanges like Binance, like Huobi are our customers.
Okay.
We look at customers across various, if I can use that, sales terminology. And it is if I talk about specifics in financial services, Börse Stuttgart is one of our customers.
Okay.
Finoa, Swissquote. I mentioned Binance and CoinDCX and Huobi. We have protocols as our customers.
Interesting.
And,
interesting.
Yeah, and for example, like I mentioned the recent ones, Near Foundation, Cardano from last year, RSK, Filecoin at the end of last year, we went live this year. From before, like more than a year ago, Tezos and Waves and Ripple. We also have, and this is an interesting view, our partners are also our customers. So while they provide our solution to their customers, they're also customers themselves. One of our largest partners and customers is Avaloq, the Swiss core banking software provider. The custodian Taurus is another one. We also partner with, for example, law firms on in a niche area that's growing, which has to do with, let's call them investigations. I wanted to say criminals, so investigations that may end up in criminal proceedings against perpetrators that steal crypto.
Yeah.
And in there, while we provide the core tracing of movements of stolen crypto through various blockchains.
You said that in the beginning that you had a strong platform, very strong platform with different algorithms. How was it built? Can you please get back to it? Because it's very interesting to understand, I mean, for the audience to understand how you build that kind of platforms and how you adapt it.
Yeah, there are 4 building blocks. There is on-chain data, off-chain data, the connecting of them, and the analytics on top of that. So on-chain data is we literally copy all transactions, all addresses, the transaction hash, the address, and so on, from, as I said, at this time, 45 blockchains, but the number is growing, into our own, let's call it a data warehouse, even though it's not exactly a data warehouse, it's much more advanced than that. And we copy for the reason of being able to run algorithms on a consolidated data model, what is called a nice data model between there is only one data model for all these copies, so the target, because not all blockchains use the same methodology. So we adapt to one core data model. So all the on-chain data gets moved to our platform. Mm-hmm. Now, it's a much more complicated and difficult data collection for off-chain. So we look at entities that are conducting activity on blockchains. So we are using, it's very easy, for example, to go to regulators and registration websites for virtual asset service providers. That's like easy one. Various data services, but also look at the internet, both the open and the dark, or the light and the dark part of the web, to see who does things. We crawl every possible data source, from Twitter to forums on the dark web to data leaks, to see who has activities on the blockchain. Mm-hmm. We also, of course, work with regulators, with law enforcement, and many times with the virtual asset service providers themselves. They are our customer, or they provide data about themselves. Mm-hmm. At this point on the on-chain data, I said about a petabyte of data, 45 blockchain. On the off-chain, we have data about 30,000 entities that control activity on blockchains. And now the third module is we conduct what's called attribution. So we can determine, we do the attribution of on-chain to off-chain entities. In other words, it's anonymous, but it's not. We know who controls what. Even more, we have clustering algorithms that will show, for example, that a specific ransomware group controls 3,000 addresses.
Okay.
And they are all related to the same ransomware group. And this is how we are able later to conduct investigations, because we know that they are controlled by the same entity.
And it's updated, continuously. I mean,
this is updated like on-chain data block by block.
Yeah.
Now, I'm talking minutes or hours. Off-chain data depends on the data source, but also the moment it happens. So the easiest, and I described this before, is sanctions list. So sanctions lists are published like within minutes. We have the sanctions list updated. If a new ransomware attack happens, the moment the information is published or we see it on the dark web, we update. So this is happening all the time. Now, of course, we are not going to update registration data for a crypto exchange that has been established 3 years ago. Nothing changed. And so there is nothing happening in the last 12 months. But this is updated all the time. The on-chain and transactions, that's added all the time. So now we have all the on-chain data, all the off-chain data. We have the attribution, so we know who does what. And now on top of that, the fourth block is we have risk algorithms. And risk algorithms, we are now approaching 400 different risk algorithms. We have knowledge-based algorithms, which are deterministic analysis. In a sense, the attribution is part of that risk algorithm, so the ownership of our address. We also look at the clusters. We have the algorithms that will see which addresses are associated with an entity based on behavior that we see. This is also used, the knowledge base is also used for asset tracking, because in the end, in asset tracking, you need to show evidence. You cannot say, we believe that there is a likelihood that this is the same money. This is not good enough for the judge to say, okay,
it's a bit light. It's a bit light.
Yeah, we need to be precise. Yeah.
Yeah.
Now, we also have non-deterministic analysis, like risk-based, that are both statistical and machine learning. Machine learning is, for example, what we do with mixers. So in mixers, mathematically, it's impossible to associate input with an output. It's designed like that. So it's impossible to make a clear determination. However, using machine learning, also artificial intelligence, to detect patterns, we can, with a very high level of certainty, associate input addresses with output addresses, especially for amounts that are a little bit larger. So someone moving through a mixer, a small amount like 5 Bitcoins, that's not possible to connect input and output. Larger amounts, our machine learning will detect that. So, and now we put all of this together, like 380 risk flags, we call them, which are calculations.
Yes.
And we have an aggregation methodology. In the end, we say our customer, this is the easiest use case. Our customer will give us an address, and within like 1.8 seconds, we come back and say, risk score is 17, low, no problem, do business, or risk score is 93, high risk, stop, investigate.
Yeah.
And it's, in a sense, deceptively simple. Yeah. So it's very easy. What's the big deal? Yeah, we give you an address, and in 2 seconds you tell us 72. Now, behind that, it's a huge data collection exercise. It's a petabyte of on-chain data, there are 30,000 entities, 380 algorithms, and the aggregation. And because of the design of our solution, we're able to do this in almost real time. We say up to 20 seconds, because sometimes you go to an address and you see there are 10,000 transactions that are associated with that address, and the calculations are complex, and it may take 18 seconds to come back with that risk score. But these are rare. Most of the cases, more than 95% of cases, we are able to provide the result in seconds.
It's impressive. I hope that the audience understood as I did, but thank you very much. Yeah. It was very detailed. One last question about your solution, because you said that it matches local AML regulation, because of course we know that AML is really country by country, the definition and the environment has to be treated locally. How do you ensure that it manages local regulation in all the countries where you're deploying your solution?
There are 2 types of regulations, and there is guidance. So TATA provide guidance, and this is across jurisdictions. So we start with that. And after that, we adapt to specific regulations in countries. There is one thing to understand is that the level of precision or development of regulations is quite different, jurisdiction by jurisdiction. Some geos, locales, they have no jurisdiction, no regulation. Some of them are quite advanced, like the US. European Union is moving slower than the US, but it's moving, and we are part of the effort of both the European Commission and European Parliament to develop regulations that are both reducing risk and not stopping the development or the useful part of crypto. We have on our team a couple very smart ladies, very experienced, that know this. They have been part of the regulation world, and they work with us now. And they both act as the liaison with existing regulators, and they also explain all this to our customers, and they help guide the product. So the product, the AML model, as we call it, is customizable, and it is customized by our customers depending on the local regulations. We help with that. Yeah,
okay.
So.
Okay, yeah. That is very important.
But it's very much fluid. It's work in progress around the world. At one end, the naysayer that say, no, this is a fad, this is gonna go away. Just ban it, yeah. And the joke here that Bitcoin has been banned 679 times. And guess what? Still here.
Yeah, exactly. Yeah, one last question about your funding round last year. If I remember correctly, you made a $8 million Series A, correct?
Yes.
Yeah.
Yes. So it was $8 million a year ago.
Yeah.
And that helped us grow both on the product side and on the sales commercial side. We now have a partnership team, small direct sales team. We have created a digital channel where especially startups can come, and we help them get a level license, like almost for free, and with a lot of digital support without necessarily having people talking and explaining. So we put all this in place. We've expanded from 11 blockchains to 45, 80,000 cryptocurrencies and tokens supported to 930,000 yesterday, and another 57,000 scheduled for October. So we've expanded everywhere. In the team, in the commercial side, we expanded to partnership and on the product. So everything was done to help us become, I would call it, a mature software company in this field. We are, in the end, what we sell is software as a service. Our customers will get a login and a URL, and they log into coinfirm.com, the AML platform, and they use the product. And at the same time, it's very specialized back-end and infrastructure. And as I mentioned, it's a huge data set and a very complex algorithm. It's also a user interface and an API that can be used by our customers. So all of this, while the seed was there a year and a half ago, now we are moving to be a more professional software provider. Accelerating and also expanding. And we've seen TradFi moving into this space, and they're talking with us. And of course, I'm glad that we're having this conversation, because visibility is very important for us. We don't have the same resources as our larger competitors. I end up having to say many times at conferences that we are like, and I mentioned the name of our largest competitor, Chainalysis, to shorten the conversation, because they have the financial power to be everywhere and talk with everybody. So we think we have better technology for some of our cases, some of our customers. At the high level, we all offer the same solution, of course.
The output, you mean?
It's like when you buy a car. Do you buy a Kia? Do you buy a Mercedes? Do you buy a Ferrari? It depends on your budget.
I see your point.
Exactly.
Yeah, and amongst your investor, because I believe that we know each other via Pascal Bouvier from Milgram Ventures. I mean, I had Pascal on my podcast, and I believe that this is the first time I heard of Coinfirm. And except...
You see, my point. Yeah, exactly.
Yeah, and he's very knowledgeable.
Yeah,
amongst your investor, you have a very knowledgeable investors. I'm thinking of Pascal, but also in CoinShares. And who are the other investor in this round who participated?
So we had outside Milgram Ventures that are specializing in crypto, and Pascal Bouvier, he's also he's on our board and a supporter of Coinfirm for more than 2 years now. Is Avalok Ventures, our partner and customer. They have a corporate VC, and Avalok Ventures now it has changed name to 5T, and Alex Christen is on our board, the CEO of 5T. Also, Six Fintech Ventures is the venture arm of the Swiss Stock Exchange. They are also a major investor and co-lead last year, and they're on our board. CoinShares is also a significant investor. And Chain Valley Ventures, which is a syndicate of Swiss-based investors. Also, Alphabet out of Poland is one of our large investors, and Bird Capital out of the UK, also one of the large institutional investors and on our board. Okay. So you see, it's
very international.
Only from Europe with heavy participation from Switzerland. In Switzerland, we have our largest number of customers and largest revenue comes from Switzerland. And a good number of investors are in Switzerland, but we are also, and I mentioned, in 40 countries.
Yeah.
So we have them everywhere. It's not difficult to support as long as you don't have to physically be in front of the customer.
Yes,
you can do it
course.
from anywhere. Yeah.
Yeah.
Of course, time zones are a challenge.
Yeah. But you're 24/7, huh? You're open 24/7.
Pretty much, yeah. And this was a very interesting situation, talking about 24/7. One prospect has complained, so before buying from us, that our competitors, they state very clearly what their business hours are. And I have to acknowledge we made a mistake. We didn't insist to say we are 24/7. So there is no concept of business hours for us, but it was considered a negative because competitors, they say 9 to 5.
Really?
Maybe in the past, but for us.
But the markets open.
Yeah.
Markets open or open even on Saturday and Sunday.
Exactly. Yeah. So crypto never sleeps. You know that. Yeah. That's why there is an internal joke that crypto is like New York. Never sleeps. Yeah.
Last question before we close the discussion, and to open for the audience, what are your next steps at Coinfirm?
We are now raising the next round of capital, and that will allow us to grow. Specifically, we will be more visible in the 2 continents where there is a lot of interest for crypto and for our solution, specifically the Americas or North America and Asia. We have a contingent in Singapore at Token 2049 right now, and we'll be going later this year in a month, and I'll be there to Money 2020 in Vegas. We now better known. Our marketing team has done a great job explaining what we do and bringing us to the forefront of, in a sense, the thinking, the investigation of this kind of solutions where customers are looking at that in our marketing. And we do it with very limited funding. We are doing it in a smart way. We have over 26,000 followers on social media. I'm talking professional social media, Twitter and LinkedIn.
Not on TikTok.
Not on TikTok. Maybe.
You're not posting videos on TikTok. I'm surprised, Mircea.
Give me an idea. Yeah, maybe TikTok. That's why. Yeah. And so we are very visible there. We continue upgrading the product. We have launched several new services. We keep adding. We have now a free compliance check tool. We have a new product that we had in beta for a while. We launched in May. This is the AML Oracle, which is a smart contract that we have deployed on 9 different platforms. It is live as of middle of September, 2 weeks ago. And we are now in discussion with large number of owners or controllers of smart contracts to use our product to prevent, because we're talking about staking and yield and so on, so help them prevent doing business with the ones or counterparties or entities that have engaged in illegal activities in the past. So it's risk-based. We give them the list, and it's atomic in the sense that the transaction can be stopped before it happens. It's almost, someone comes into the bank with a suitcase full of cash. Yeah, there's a suspicious activity. Yeah. In crypto, when we detect something similar to this, it can be stopped automatically. It doesn't even happen.
Yeah. It's what, because I didn't ask you the question, but it's the Atomic AML Oracle. This is correct? What you call
it's AML Oracle is the name of the product. It's an oracle in the sense of DeFi terminology, in the sense that it provides off-chain data, but it is on-chain. It's a smart contract. It's just that the smart database inside the smart contract is fed by our calculations. So we distill the calculations. We give that end result, as I mentioned earlier, just the numbers, address, risk score, which is the result of the complex calculations. We put that in the smart contract, and our partners or customers running this on platforms, they will be able to get instantaneous confirmation, should I accept this transaction or not? And we call it atomic in the sense that the intended transaction can be reversed. So it's part of the same, it's the same transaction that try, stop, pause, nothing happens. And this is the kind of sequence of events that we support. We've seen a lot of interest. We launched on the RSK platform, and they were our first partner more than a year ago. Has been our testing ground, both us and RSK. We worked on that. And we put it on more platforms in May for free. As of September now, it's another SaaS product, if you think about it. It's software, even though each smart contract is a piece of software, and we provide the data to our customers.
Okay, that was very interesting, very technical. I hope we didn't lose the audience, but that was very detailed. Thank you very much. Before I stop my record, I always ask, in my French version, recommendation of a book or a podcast, something that inspires you. Can you share something with us?
It is a very long list. And I saw that when we had the initial conversation, and the only one that I keep recommending is the Bitcoin Standard. But I recommend the Bitcoin Standard because most of our target or our audience, people that we talk with, they don't know enough. Yeah. And I've been in Bitcoin or involved or linked for many years, and I was always being asked okay, can you give me a simple explanation? And I said, this is for every complex problem, there is a simple explanation that's usually not the right one. So you need to go and spend time and understand. I'm having these conversations in my social circles, and people say, oh, crypto is a scam, or crypto is a Ponzi scheme. And so, so as I said, it's complex. Yeah. Don't look for a simple. So spend time reading, understanding. You don't necessarily need to understand the mechanics, how it is being done, but
Bitcoin Standard, it's a sort of Bible. I read it, and it was first time I heard of it was Pascal Gauthier. I received the CEO of Ledger, and it's very approachable. I don't know if we can say that, but it's very easy for somebody coming from a bank.
You can even, and I've seen that someone took a picture of one of the well-known traditional financial services person. I'm not going to name names in the United States, one of the top 3 people. And she was on a plane and reading Bitcoin Standard.
Okay, I get it. Okay. Thank you very much, Mircea. It was very interesting. Thank you for your trust also, because you're the first one. So I'm very happy that accepted
my pleasure. And thank you for thinking of us and giving me the opportunity to talk about what we do. And hopefully there will be a better understanding of what crypto can do. Yeah. And instead of saying, oh, no crypto because we don't understand it, that is too risky, let's manage the risk and take advantage of the benefits, huge benefits that crypto offers to banks customers.
Yeah. Okay. Yeah. Thank you, Mircea. Talk to you soon. Bye-bye.
My pleasure, Solène.
Bye.
Bye.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.